Welcome back. Well, let's focus on the cement space. We just talked about real estate. One of the raw materials would be cement. And JK Cement, well, that's the next company on our radar. They've gone ahead and they've commissioned their grinding facility in Madhya Pradesh, and that's on expected lines and on expected timelines as well. How do things ramp up from there, and how is demand as well as pricing moving ahead? Well, Mr. Anuj Khandelwal, the business head at JK Cement, joins us on the show. Hi, Mr. Khandelwal. Good morning, and thanks so much for joining in here on CNBC TV 18. Well, give us a couple of details with regard to this 1.5 million ton grinding facility. Where does it source its clinker from?
Okay, Nigel, firstly, thanks for having me on this segment. We are very happy that we've commissioned the Ujjain grinding unit of 1.5 million ton. It will source its clinker from our Rajasthan integrated plants, Mangrove, and that's where they'll get the clinker from.
Got it. Okay, all right. Fair enough then. And also, I think in the coming year, that's FY25, you'll have another 2.5 million ton grinding facility that will get commissioned. So that as well sources clinker from where?
No, so that will be in Prayagraj. It's a 2 million ton facility. Yes. It will source from our Panna integrated unit. Okay, so that's in the eastern part of UP, so it'll be very distant to take it from Rajasthan. We have an integrated plant in eastern part of Madhya Pradesh, from where we'll send the clinker to Prayagraj.
Perfect. So, because clinker sourcing was something that the street had a couple of concerns on, but as you're clearing it out, the Prayagraj unit will source it from Panna, while the MP unit will source it from Rajasthan. Let's focus on volumes then for the year. When we had JK Cement in the past, when they joined us, they were telling us that because of the capacities that have come on stream, whether it is the Panna unit and the other facilities as well that will ramp up, the volume growth of JK Cement will be far better than what the industry is working with. For this year, what kind of volume growth are you looking at for JK Cement? That's FY24.
Yeah, so look, in the first 6 months, we've been, better than the industry. We've clocked 20% plus volume growth in the first 6 months or so. And, we, target to end the year consolidated volumes of around 18 to 18.5 million, and grey cement volumes around 16 to 16.5 million. That'll be at a 15-16% growth versus last year. So that will be...
Right. Anu, just to comment, the consolidated volumes you said will be 18 to 19 million or 18 to 20?
18 to 18.5 million.
18 to 18.5, and out of that, grey will be how much?
Around 16 million, 16 to 16.5.
Okay.
You could take 16 million as a number. Yeah.
Got it. Anuj, hi, good morning, and thanks for joining in. Just a couple of more questions. What does this mean in terms of an EBITDA per ton from here on? Earlier, I think we were talking about 1,000 rupees per ton in the second half of FY24, but you achieved that in the first half itself, so congratulations. But can you build on to this 1,000 rupees in FY25?
Yeah, just a small correction. I think first half was 950 rupees. In Q2, yes, we reached 1,000 rupees, around 1,030 rupees per ton. But yes, look, we are looking at higher EBITDA numbers in H2, given the demand is likely to be good, and our unit economics and unit profitability is also improving. So, we should definitely be better than the 1,000 rupee per ton guidance given in the H2 of the year.
Sure. Would you have any kind of number? Are you looking at 1,500 rupees? Just trying to understand, what the ballpark would be over the next 1 to 2 years.
So look, 1,500 is very far. We are at 1,000, but at least we'll definitely try to be at least 100 rupee a ton more than what we've clocked. So around 1,100 rupee per ton is what we'll at minimum target. But it's too early to give estimates. We've just started H2.
Okay, all right. But 100 rupees per ton is par for the course, because in the past quarter you did around 1,030. So, I think going by what you're saying, maybe we work with around 1,100 to 1,150 rupees per ton, a broad range. Workable, right?
Yeah, hope so.
Okay.
Yeah, looks like that.
Part of that will have to be price increases. So, give us an update about how price increases have panned out in quarter 3. If I compare it with the average of quarter 2, and also, premium sales, I think they were low teens as a percentage of your trade sales mix. Where do you see that number headed, say, by the end of FY24 and by FY25?
So, Nigel, look, pricing is very region-centric in cement, right? So,
yes.
We've also seen that playing out across our regions. In North, there has, given the kind of demand which has been there due to the pre-electoral kind of activity, essentially, we've been able to take around 10 rupee per bag on an average Of course, it also varies within North, but at least 10 to 15 rupee per bag we've been able to take in North. In Central, given high competitive intensity, the prices have remained flat. And in South, again, because we were off from a low base in terms of pricing, we've been again being able to take around 15 rupee per bag. So overall, you could say around 8 to 10 rupee per bag, on an average, we've been able to take.
And premium sales, you wanted to mention that as well as a percentage of your trade sales?
Absolutely. So premium sales right now is around low teens, as you said, 12% or so. By the end of FY24, we would want to take it to around 14% and maybe in FY25 target 16-17%. We are going in a very
Got it. I don't know. I think there's something with-
methodical way because
Okay, there's, I think, some issue with your video. Okay, I'll try again. But that's great to hear that you're looking to for higher amount of premium sales. Any kind of inorganic growth plans that you have? If yes, what would they be? Would that put any pressure on your debt?
So look, we definitely look at opportunities, but it's very difficult to plan around inorganic growth, right? Because the opportunities will come when they come. So our base case plan is, of course, organic growth, and depending on opportunities, we are open to inorganic growth. As far as debt goes, look, right now our net debt to EBITDA, the ratio which we kind of look at with more precision, is around 2.1 or so. We want to definitely bring it below 2. But at the end of the day, we also want to create a healthy balance between debt reduction and growth. Because if we go for very, very aggressive debt reduction, it will also hamper growth. But on the other hand, of course, for obvious reasons, we also don't want to be very high on debt. So while it is 2.1 net debt to EBITDA right now, we want to bring it down to lesser levels by the end of the year.
Okay, so you want to bring your debt down, net debt to EBITDA to lesser levels, got that. But the reason I was asking about inorganic plans is because you have this target, right, of 25 million tons by 2025. You plan to achieve it through the organic route itself, or at some point you would, want to, because it's not too far away, so which means you would have to do some inorganic moves in the next 1 year itself.
No, not necessarily per se, because look, before Ujjain, we were 20.7, right? And this is just grey cement capacity I'm talking about. With Ujjain, we are at 22.2. With Prayagraj, we'll be at 24.2. So, 24.2 million tons capacity we reach before the end of next calendar year. So, the plans per se are not dependent on inorganic opportunities, but having said that, we'll always keep our eyes and ears out.
Okay, and but I'll tell you what, the reason that we are asking you, Anuj, is because I have my ear on the ground, and I believe in the next 4 months is going to be very interesting for the cement space on the inorganic front. I believe that a couple of transactions will close out. Have you looked at it? Have you heard about a couple of units, say in the vicinity of 5 to 10 million ton units on the block? Have you all been approached by bankers? Are you all in any kind of discussions?
So too premature to tell that, but yes, we get opportunities, we get approached by the bankers, but too premature to talk about it.
Any region you want to tell us? When you all have been approached?
Maybe in our next call, yeah. But let me just clarify that our base case plan is organic growth.
Got it. Yeah, and you all have maintained that as well. On the debt number, would you like to give us a guidance? Because, you all have indicated that around this 3,100 crores, you all have topped out on debt. And maybe things will, you'll see some kind of debt reduction from here. So has debt topped out? And also, what is the capex plan for this year? I think it was around 1,300 to 1,400 crores for FY25. Have you all revised that number?
No. I think the numbers are, from the capex perspective, are quite consistent. We've, one of the big, of course, when you look at the 1,300 crores, of course, there was completion of Panna capex, which has already happened. Ujjain commissioning was another big capex, which has already happened. Our, capex plans on Prayagraj unit is underway. Plus a few more capex, capex items like waste heat recovery system in Muddapur plant is already on the way. So we've remained consistent on our capex guidance, and that's how we've progressed.
Okay. Just before we let you go, this recent foray that took place into the paint sector, it's very interesting. Just tell us a little bit about that. What is the kind of revenue ramp up that you're expecting? When can we expect break even? Because this is a very competitive space as well.
So look, I don't lead the paints business. So, I might not be the best place to talk about it, but I can at least tell you that it's off to a good start. We've ramped up in a few states, UP, Rajasthan, etc., and we've got good initial success from the channel. So, but look, we are in the growth mode, and the break even, etc., might happen, maybe a year or two down the line. But as of now, we are very cognizant of how much burn we do there, and given whatever our plans of our commitment on investment was there, we are sticking to it. We are not. We are quite disciplined about it. But more,
Okay.
more details. I think I'm not the best place to give.
But we appreciate you joining in, Anuj, and giving us a fair bit in terms of an outlook out here. Sourcing of clinker, you've cleared that with regard to your expansion plans. You're looking at around 18 million tons for the year on a consolidated basis. And the EBITDA per ton number will improve by close to around 100 rupees per ton. Thanks so much for speaking to us here on CNBC TV 18.
All right, that's the word coming in from JK Cement.